All right, guys, it's been a rough year for investors, right? I think if you are investing, you have a portfolio, there's a high likely that you are seeing some losses. And I am definitely seeing some losses. In my channel, on this channel, I'm transparent. I think that's the best thing to do when you are putting out your strategies, your opinions, and I want to be transparent during the good and the bad. I'm not just gonna show things when they're good and not when they're bad. So right now, my portfolio, well, let's say this. At the beginning of the year, I was at a 23% profit in my portfolio. Now I'm just over 9%. So I've had a pretty significant dip in my portfolio. That is due to mainly one stock that I got into before it crashed. But overall, we're going to share the three biggest losers in my portfolio that are really causing my portfolio to go down. Everything else is doing fairly well. It's either slightly in the red or it's in the green still. But these three are really the big negatives of my portfolio. So year to date, our stock market has gone down, right? We've had some negative things happening out there in the news, in the world. Of course, we have the Russia-Ukraine possible, issue, conflict that's going on. And this is something that is just getting worse and worse, it seems like, every day. We have inflation at a 40-year high, so that's putting a lot of pressure on the stock market. And we have rate increases that are expected to start in March. So that's, causing the stock market to think that there's going to be less borrowing that will occur, less spending. So it's causing mass fear in the markets. That is something that I am seeing everywhere. People are selling stocks left and right, which I disagree with. I think if you invested in quality companies and you did your research and you're bullish on a company, you should never sell, right? But people have weak hands in these situations and they end up selling. So good for you if you're sticking through with it. I think people learn the hard way when they sell. I have too many examples of friends that have done that and then they regret it. So before we get into the three stocks that are losers in my portfolio, I just want to say, I appreciate all of you that are subscribed to my channel. And if you're new and watching this, feel free to subscribe. It's free. Nothing's free these days, really. And with inflation as high as it is, this is something that I think is very beneficial because I share a very diverse knowledge set. I share my strategies. I share my portfolio, just everything financial. So feel free to subscribe. I appreciate it. I think you'll enjoy this channel. So let's get started. So there are three stocks in my portfolio that have caused it to go down massively. The first stock needs no introduction. That's AT&T. This stock has been a dog for years. And year to date, it's down 6.61%. But long term, it's down a lot more than that. And there's a lot of reasons for that. So I have some positives and negatives to go over in each stock. But let's first talk about AT&T. So this stock is one that I will say is very controversial out there. There's a lot of people that I think just growingly hate this stock because this company has made some bad acquisitions, made bad decisions that have lost them money. You look at the Dish Network whole situation. Finally, they bought Warner Media. This was something that started bringing investors back into this company because people saw growth. Well, now they're spinning it off. But I will say that due to some fundamentals of their financials, it's probably going to be a good thing long term. So if we look at AT&T, they are a cash cow machine. They brought in the last couple quarters over $21 billion in cash, and they have on the downside, they have a lot of debt. This is where this company is suffering. They have $174 billion in long-term debt. This is due to their bad acquisitions, having to sell for a fraction of the price, and just, 5G, this whole 5G rollout thing is expensive as well. So their debt is out of control. So that's what the management is really going to try to get a hold of. Now, AT&T investors have gotten into this company for that dividend. Dividend growth investors love AT&T, but they recently announced they're going to be cutting that in half, coming in the second quarter of 2022 when they spin off their Warner Media asset. But right now, their payout ratio is 75%. They want to lower that to about 40%. And they're going to do that by reducing their dividend from $2.08 to $1.11 per share. Right now, their dividend yield is 8.71%. That is a very high dividend yield. So that'll go down to more about the 4 to 5% range. which is still a great dividend in my opinion. But if you look at the big picture, you have to know that if you have a lot of debt, whether it's an individual or a company, what is the thing you should do? You should focus on paying down that debt severely. Debt can just create chains and prevent you from really being able to pivot out in this world. And so I really do respect that they're cutting their dividend in half, they're spinning off their Warner Media, and they're really putting a focus on reducing their debt, because once they're able to do that, that's going to allow them a lot more possibilities to acquire things that, if hopefully they make better decisions, but that will help their company and business long term. But right now they just don't have that leverage. So I really do respect that they are really focusing on paying down that debt, because I think that's going to really, free this company into some more growth, because the last 5 years have been horrible. So I think the tides will turn, and I'm holding on to this company because I want shares of that Warner Media Discovery company that there's is going to spin off and be created as, because I really do think that is going to be one of the top 3 streaming companies behind Netflix and Disney Plus. But I think it can even have the possibility of becoming in second. Netflix will stay first in my opinion, but I think to have one of the top 3 streaming media companies out there, or media companies in general, is going to be a great thing. So I'm excited about those shares. And then I think once they start to get that debt under control and being reduced, I think the stock will start to grow again. I think with a 4 to 5% dividend, I think that's a great thing. I would trade, down to a 4 to 5% dividend for some growth in this stock, instead of it going down and you really losing money in the long term. So I'm okay with that trade-off. Let's get rid of part of that dividend to start this company on the right track. So I'll hold AT&T probably for at least the next 2 to 3 years to see what happens. Hopefully, if I do decide to sell out, I will get out at a gain, but I'm not going to sell at a loss right now, especially with them moving towards a positive direction, in my opinion. So in my portfolio, AT&T is down 20.54%. So it's really been dragging my portfolio down, but there are 2 more stocks that have done worse. So the next one is a newer holding of mine, and I'm very bullish on this for reasons that some people may not be, but that's okay. We're all individuals, and we're not all going to invest the same way, but that is Facebook. Now, Facebook is down 26.54% in my portfolio. And if we look at it year to date, it is down over 40%. To be one of the, largest companies in the S&P 500 to go down 40%, that's unprecedented. This is to me just a lot of fear in the market and a lot of people selling out, even though they have great financials. You look at their assets, they're bringing in over $48 billion as of last quarter. It has gone down, but that's because they did state that they're investing $10 billion into the metaverse annually. Analysts are actually very bullish on Facebook at a 9.1 out of 10. And I think that's due to its healthy cash flow and its low debt, and it also, having this opportunity of a future in the metaverse. But if you look at their debt, their long-term debt is only $13 billion compared to their cash, as we stated, at $48 billion, which gives them a very healthy debt to assets of 25%. Now, AT&T is over 66%, so you can see why they're focusing on lowering that debt. So Facebook has very good financials. Their net income is healthy, their earnings per share is growing. And so, I think one quarter of, a miss that, you look at it outside the view of just that quarter, this company is doing very well. And so what are my thoughts on Facebook? Well, the main things that are hurting them is the privacy changes with the Apple iOS, and Google's announcing that they may do the same, giving people the option to opt out of being tracked. Now, Facebook makes most of its money off of ad revenue, and so of course this is going to hurt them. Of course this is going to put probably some slow growth future prospects on them, but you have to keep in mind that this company has one of the largest user bases out there, and we're going to talk about that in a minute. But their privacy changes allows people to not be tracked, which of course advertisers aren't going to pay as much money for less targeted audiences. Another big thing is in Europe, they're looking at passing legislation that will prohibit any user data from being transferred from the Europe to the US. So it'll stay in Europe, it won't come over to the US, and of course that'll affect Facebook negatively and other companies as well. So that's expected, I think, to make a decision next month, so we'll keep a close eye on that. Of course, a lot of the public has a negative view on Facebook, and of course they put out guidance that their growth it's going to slow down this next year due to, of course, those ad revenue slowing down due to the privacy changes from Apple and possibly now Google. So those are some pretty decent negative things, but the positive is, in my opinion, I'm bullish on the metaverse. I recently tried the Oculus. I did a video on it. Be sure to watch it. But this thing is amazing. I think it has a very bright future. The Oculus sold like crazy over, between estimated like 7 to 10 million devices in 2021. Of course, I tried it. It is way better than I thought. So I'm very bullish on the metaverse, and Facebook was first to market. They're taking the market share right now, and I think they're going to do very well long term with this. They have the largest user base. Again, they have 2.91 billion active users. 2.91. The population on Earth is 7.9 billion. Just put that in perspective. 2.91 billion monthly active users. That gives them leverage. That gives them a lot to work with to think of ways to create revenue off of that. So that's a positive for me. Of course, their financials are good. We saw their large cash, low debt. And they just announced today, of course, TikTok is a huge rival and they've blown up, but Facebook has its own Reels, which I think, they just released in the US, but now they announced they're going to release it globally. And so this is a mimic of TikTok. Not to say it'll be as popular, but I think it'll give them more exposure to that younger user base. And I do see TikTok videos on Facebook, so they're using that platform to show it all. So I think that'll be positive for them as well. So Facebook is just one that I'm really bullish on the metaverse. I think that's one of the reasons why this stock is controversial. I think they'll figure out a way to make money, and be creative based on what Apple and Google are doing with their privacy changes. They're a smart company. They have a lot of smart people working for them, so I think they will figure that out. So I'm bullish. I think long term, especially within the next 2 to 5 years, I'm going to make some good money on this. Even though I'm down 26.5%, I don't think that'll stay down for long. Let's give it a year. A year from now, I think I'll be in the green, pretty healthy. Last stock. This is a speculative stock and one that is kind of a cult stock, but it is also controversial, and that's Tattooed Chef. It's down in my portfolio 28.31%, so pretty big. Let's just look at the stock chart. It is down year to date 22.5%. With Tattooed Chef, they are a growing company. They're new, so they don't have a lot of history of financials, right? So you got to look beyond that. I think a lot of people just look at the financials and they go off of that. But if you've researched this company, they are growing massively. They are in almost all stores that I've been to now. They are in Target, Sprouts, Costco, Walmart. I know they're in Kroger. This company is getting its products out there, and they're expanding their SKUs. And they're not just a frozen food company anymore. They're now branching out. They're going to be branching out, shall I say, into probably snack bars and chips and things like that. So I think there's a bright couple years ahead, exciting couple years. And it's going to take a while for, they did some acquisitions recently. It's going to take a while for that cash that they put into that to start generating some positive income for them. They are innovative. I think they come up with really good products. They're expanding. And we got to take a look too at the plant-based food market. It is expected to grow 162 billion in the next 10 years. And if we look at this chart, the plant-based meat, plant-based dairy, and other plant-based areas are expected to grow massively over the next 10 years. Of course, they're in the frozen foods, but they also have meat-based alternatives on their foods, and they are going into probably snacks, nutritional bars, and who knows what else. The possibilities are endless. This is a vertically integrated business, so they have a lot of control over expenses and their products, which I think is great. So even though this stock is down massively, I think that's due to, of course, it being a new company and the financials. It's going to take a while before this company becomes profitable and everything catches up with it. So I'm willing to be patient, and I think I will give this a target of probably 2 to 3 years before, it starts to show some net, positive net income consistently, and the stock price is in the green in my portfolio. And that's the name of the game, long-term, patient. So with AT&T, Facebook, and Tattooed Chef, I definitely plan on holding Facebook. I'm the most bullish on that. Tattooed Chef, I will definitely hold. I'm bullish on it as well, not as much as Facebook. It's more my speculative play. But I do think the plant-based food industry is definitely going to grow. And I see this company going out there, working hard, innovating. And so I'm willing to put my money in on that. AT&T, I got into this one early on when I started investing, so probably not for the right reasons, but I'm in it. I'm at a 20.5% loss. And the things that I do like are, I'm going to get shares of a new media company that I think will be one of the top 3 companies in the world in the streaming area. I think they're focusing on lowering their debt, which is awesome, and that's what you want to see. So they're going to start trying to focus on growth and lowering their debt, which that's good decisions. As unpopular as it might be, cutting their dividend and getting rid of Warner Media, they got to do what they got to do, and so I respect them for that. I will hold for probably the next couple years at least. We'll see what happens after that. Maybe I'll sell. But as of now, I will hold to see what happens with them reducing their debt, if they actually can do it. So there's negatives going on out there, but there's also positives. The pandemic is cooling off massively. Mask mandates are being lifted everywhere. People are getting out there. It's busy. Here in Albuquerque, the streets are busy. The stores are busy. It's busy everywhere. So I think that, people are going out again. They're doing things. So there's a huge positive there. Companies are going to continue to work hard and innovate and grow. So don't let these dips, these, downtrends, these crashes with certain companies scare you. Just let it excite you if you're in it for the right reasons. If you've researched them and their quality and you are bullish on them, add more. They're on sale. That's what I'm doing with Facebook. So I hope this video was good. Let me know if, you guys are experiencing any volatility with certain stocks. There's a lot out there. Of course, Netflix was another one. I can go on and on, right? There's really very few safe stocks out there right now that haven't been affected this year. But I'm transparent. So these 3 stocks are really dragging down my portfolio. But I think Facebook and Tattoo Chef, especially Facebook in the shorter term, will turn around. AT&T might take a few more years longer, but I think all these will eventually go into the green. Facebook, I think, will be a home run for me. It's just my opinion. Tattoo Chef, I think, will be a very healthy growth company in the next decade, especially with the plant food based growth expected over the next decade. So there's my top 3 losers. This year's been rough, so I wanted to share these with you. Everything else is doing fairly well in my portfolio. So of course, I'll do a portfolio update maybe in the next couple weeks and show you guys what all my holdings are doing. And so let me know what you guys are doing in this stock market dip, crash, whatever you may call it. But I hope that you are staying strong and not choosing to sell out just because there's fear out there, because that's what the news is going to put out there, is fear, because that's what sells. So always take yourself outside of that and look at the bigger picture, and that'll help you make better decisions. So we'll see you next time on Mark's Finance and Fitness. Have a wonderful day.